The first step is to adjust the interface. In the lower right-hand corner, you can turn on one of the proposed color themes and choose your preferred type of chart display in the Technical Tools panel. Select an asset before you start trading on the platform. In the Asset menu, you will find all of the possible types of options, assets available for trading, as well as your potential profit, which is designated as a percentage. On the trading panel on the right, specify the size of your investment. Then, select the expiration time. This time is indicated by a red line on the chart. The white line on the chart shows the time up to which you can rebuy options. The number of options and the direction is not limited. In the main window of the platform, you can see the chart for your selected asset. Using the timeline below the chart, you can change its scale. Try to determine what the rate would be at the closing of the transaction. Will it be higher or lower than the present level? Using the call and put buttons, you can buy options. If your prediction is correct, then in the closing of the transaction, you will see your specified profit, and the window itself will be green. Otherwise, the window will be red. Detailed information on all of your current and completed transactions is shown in the left panel under the History section. Also, you can trade on multiple assets. To do this, on the Tab panel located at the top, you need to add the assets you're interested in trading and specify their locations in the grid layout. Trade wisely. Always be aware of the risks. Together with IQ Option. We have made it our mission to provide the most convenient and simple access to the exciting world of trading. And now, we are ready to present you our new product, Classical Stock Options on the IQ Option platform. There are several main stock option exchanges, such as CME, CBOE, PHLX, Eurex, etc. Annual trading volume exceeds $1 trillion. The main advantage of trading options compared to trading stocks is the opportunity to get profit from expensive stocks through affordable options. Now, IQ Option gives you the chance to buy and sell options at the best rates from all exchanges with minimum commission. We have created a simple and easy-to-understand trading terminal. Choose from one through affordable options. Now, IQ Option gives you the chance to buy and sell options at the best rates from all exchanges with minimum commission. We have created a simple and easy-to-understand trading terminal. Choose from one of over 500 assets, and the system automatically chooses the closest expiration and strike price, while also allowing you to change these parameters. With just one click, you can buy a call option if you anticipate growth, or a put option if you anticipate a decline. Your maximum losses are limited to the price you pay. Your maximum profit is unlimited. You can open and close the transaction at any time at the best market rates. You don't have to wait for the expiration to see your result. Trade assets from the largest companies, indices, and commodities through option exchanges with IQ Option. An option is a contract that allows you to buy or sell a unit of the underlying asset in the future at a fixed price. Options come in call and put varieties. Let's take a closer look. Suppose that the current value of a company's stock is $100 per share. The buyer enters into a contract that grants the right to buy the asset at $100 per share for a limited period of time. This type of contract is called a call option, and the set price in the option contract is called the strike price. For the purpose of this example, we will say that the cost of this contract is $2. In other words, this is the price of the option. Let's look at three possible scenarios. Scenario 1. The share price increases to $120 in a given time period. In this case, the buyer can exercise the option to buy shares at $100 and immediately sell them for $120, earning $20 minus the $2 that was paid for the option, for a total profit of $18 vested in the option. Scenario 3. If the share price increases to $102, the income will be $2, which covers the amount paid for the option. This share price, beyond which the trader will make a profit, is called the break-even level for the purchased option. A put option works the same way, but in the opposite direction. With a put option, the option holder has the right to sell shares at a predetermined price. In the example above, where the share price drops, with a put option, the trader can buy the stock at $80 and sell for $100 as set in the option contract, thus making a profit. A special feature of classic options is that you don't have to wait for the expiration time in order to exercise the option. For example, a trader bought a put option for the same $2, and an hour later the asset price fell to $80. The trader can sell the option whenever he wants in order to make a profit. The fixed price for buying or selling shares under a contract is called the strike price. In our previous example, the strike price was $100. For a call option, the higher the strike price is compared to the current share price, the cheaper the option. This is because the price is less likely to reach a higher strike price, although the potential profit is greater. Now consider a call option, in which the strike price is below the current share price. Options with strikes like these are called in-the-money options, since you are already making a profit. But the cost of such options is much higher, and the profit percentage is lower. For a put option, everything works exactly the opposite. The higher the strike price is compared to the current share price, the more expensive the option. The lower the strike price, the cheaper the option. The expiration time is the deadline for using the right to buy, call, or sell, put, the asset at a fixed price, the strike price. The expiration usually falls at the end of the work week. This means, for example, that you can buy an option for the end of the current week, or the following week, or for the last week of the selected month. The farther the expiration is from the current date, the more likely the price of the asset will move in the direction the buyer wants, so the more expensive the option. The cost of options is determined by the market. We use 13 option exchanges. Market conditions depend on a combination of many factors: supply and demand among traders, price volatility in the past, time to expiration, and more. We wish you successful trading on the IQ Option platform. First, choose an asset to trade. The Trending Options tab shows the most dynamic options. Choose the number of options you want to buy. The call and put buttons automatically display the amount of your investment. This is the amount that will be deducted from your balance when you open the position. When you hover over the call or put buttons, you can see two profit bars displayed on the chart. The first bar shows the projected profit of a trade in case of asset price change. This is your current profit. The second bar shows your profit at the time of expiration. Your potential profit is unlimited in classic options, but any loss is limited to the amount you invested. Complete the transaction and buy the option. Classic options are not short-term trades. You can watch your positions on the panel of open positions on the left. Track the market situation so you can sell your options at a good price without waiting for the expiration time. You can use strikes to choose the risk and potential profit. When buying a call option, a higher strike price means you can earn more profit, but it also involves more risk. The lower the strike price, the lower the risk, but the profit will also be much smaller. This is what determines the price of the option at different strikes. Buying a put option works the same way, but in the opposite direction. Classic options are available on the platform only when the American Stock Exchange is open, from 9:30 to 4 p.m. Eastern Time Zone, or 14:30 to 2100 GMT. We wish you success in trading classic options on the IQ Option platform. The MACD indicator is used to determine the current trend, its strength, and the probability of its reversal. It consists of the MACD line, a signal line, and a bar chart. The MACD line shows the difference between two EMA moving averages with different periods. When the MACD line crosses the zero line, it indicates that there is no difference between them at this moment. The larger the difference between two moving averages, the further the MACD line is from the zero line. The signal line is a smooth MACD line. By default, the average value of the previous 9 periods is used for calculation. The signal line acts as a slow-moving average, which is crossed by the fast MACD. The bar chart displays the distance between the signal line and the MACD line. It changes its polarity relative to the zero line depending on the price movement direction. If the price goes upward, the bar chart is above the baseline. The bar chart is below it. You can change the indicator settings to set the periods for MACD and signal line moving averages, which are measured in the number of candles. When the signal line intersects the MACD line in an upward direction, it indicates the possibility of price enhancement. Conversely, when the signal line intersects the MACD line in a downward direction, it suggests a possible price reduction. The main advantage of the MACD indicator is its efficiency and simplicity. The strangle trading strategy is to buy both call and put options with the same expiration time at different strike prices, with the expectation that the profit from one option will cover costs to buy both options. Let's look at a historical example to see how it works. This is a chart of Apple stock over the past year. You can see several spikes that occurred after key events for the company, such as presentations of new products or the release of quarterly income statements. Let's consider the events of April 2016. Imagine that you can go back in time and apply the strangle strategy at a certain point, but you don't know where the price will end up. The first step is to define a corridor that you believe the price will break out of. Buy a call option for the strike price at the upper limit of your corridor and a put option for the strike price at the lower end. The wider you make your corridor, the higher your potential profit will be. However, this also increases your risk of loss if your prediction is wrong. Now, if the price of the asset moves strongly in one direction, the profit for the corresponding option will cover your investments in both transactions. In this example, Apple's stock dropped significantly after a quarterly report was released. You could have pre-sold the options without waiting for the expiration and locked in your profit. Our platform has charts showing release of financial reports for various companies. You can use it to keep track of these events and apply the strangle strategy. We wish you successful trading on the IQ Option platform. The panel at the top of the screen allows you to switch trading windows. By default, there is one window open to the most profitable asset. To add multiple trading windows, click the plus button and select the assets you would like to see. Now you can switch between your assets. In order to simultaneously display multiple windows, select one of the proposed layouts. All windows are interchangeable. Move the cursor to the top edge of the window and to display multiple windows, select one of the proposed layouts. All windows are interchangeable. Move the cursor to the top edge of the window until you see the hand icon and drag one window to another. You can adjust the size of the windows too. Just hover over the edge of the window and you can change its vertical and horizontal size. You can also minimize any window, sending it to the tab bar, or remove unwanted tabs. If you choose a layout with more windows than you've opened, the remaining spaces will be filled automatically with the most profitable assets. In the Layout menu, there is a check mark that records the number of open windows. Remove this check mark, and the layout will automatically update according to the number of open tabs. The pre-scheduled option sale function allows you to close your deal at any time. You can sell options by clicking an open position right on the chart and pressing the sell button. The sell price and your profit are then indicated. Also, you can sell options via the menu in the upper right corner where all open deals and their profits are displayed. If the position you've opened is profitable, you can sell the option without waiting for the expiration time and make profit in advance from the successful deal. Your profit will be indicated in the closed deal window. If you have opened an unprofitable deal, you can sell the option in advance and return a portion of your investment. If the asset value remains unchanged after deal closing, then you are able to cancel the deal during the first 3 seconds and return 100% of your investment. We wish you successful trading with IQ Option. Price movement can be represented as a line. Area and linear charts are at your disposal for this. But most of the time, Japanese candlesticks are used for viewing charts and analyses of today's market situation. Candlesticks contain information on price changes for a particular period of time and consist of the body and the wick. The body's border displays the opening and closing price, while the upper and lower borders of the wick show the price maximum and minimum. If the price of an asset increases, then the candlestick turns green. If the price decreases, then the candlestick turns red. The 5-minute candlestick contains information about price changes during this given period. You may also imagine it as 5 1-minute periods, which would contain the same data, but on a different scale. Bars are designed on the same principle. They are made of vertical lines and 2 short perpendicular ones. Left and right perpendicular lines show opening and closing prices, and vertical lines show the price minimum and maximum. Japanese candlesticks are popular among professional traders. The value of a candlestick chart is in its bold ease of use and depth of information. With them, traders gain not only an image, but a full-fledged fundamental analytical instrument, without which most indicators are not possible. A moving average indicator is a main indicator that shows price movement direction. When processing moving averages, the mathematical pricing average of a particular period is measured by candlestick quantity. For example, in order to calculate the value of a 5-candlestick period, the indicator divides the sum of their closing values by 5. Then, the indicator moves 1 candlestick forward and makes the same calculation. In this manner, a trader can build up a line of resulting values that has a more smooth chart direction. It smooths price bursts by indicating the current trend. In case of an increasing period, the price sensitivity lowers, but lag on the price chart increases. In the indicator settings, you may choose the period of the candlesticks, and from among 4 calculation methods, the simple moving average, or SMA, is an average arithmetical value for a given period. Exponential moving average, EMA, smoothing works by taking into account the current average value on a previous period. With smoothing, the priority decreases exponentially and never equals 0. The weighted moving average, WMA, assigns top priority to the current price. Hence, the WMA chart does not depend heavily on dated prices. The priority of importance decreases linearly. The smooth, simple moving average, SSMA, takes into account a large amount of candlesticks throughout historical quotes and is much more smooth. Moving averages is a great instrument of detection for a lateral trend wherein rules of trading that differ from rules of trend trading take precedence. Moreover, when 2 indicators with different time intervals intersect, it helps determine trend reversals. Bollinger Band is an indicator that sets the range of asset price movement. It is built on the basis of 3 moving averages, one in the middle and 2 others located the same distance from the first one. Range width is calculated via the mathematical formula of standard deviation. Its coefficient may be set in the indicator setting. The higher the coefficient, the wider the range, and the more infrequently the chart reaches borders. Period is a quantity of candlesticks used in the calculation of indicator parameters. Increasing period smooths the corridor, but does not guarantee an increase in indicator performance accuracy. When the price approaches or touches one of the lines, the probability of its movement shifts to the opposite direction. The breakdown of one of the lines signals probable trend movement towards the breakdown. The higher the volatility on the market, the higher the corridor. Long-term location of the indicator is in a narrow range, usually preceding upheaval in the market. The Bollinger Bands indicator is best used in combination with other indicators, as by the time a strong trend takes place, this indicator alone becomes ineffective. The RSI indicator defines trend strength and probability of trend reversal. It is calculated in the following way. The sum of price growth for a given period is divided by the sum of the price decrease. The indicator puts the resulting data on a scale from 0% to 100%. Thus, if all candlesticks on the given period are green, then the indicator value is 100%. If red, it equals 0%. Period is a candlestick quantity used for data collecting. It is set in the indicator settings and equals 14 by default. Overbought and oversold values are also set there and equals 70% and 30% by default respectively. If the overbought value gets closer to 100%, while the oversold value gets closer to 0%, then the signals become more precise, although their quantity decreases. If the indicator intersects on a higher level, it means an oversold case, when prices are increasing too high and fast, and soon they're expected to decrease. If the indicator intersects on a lower border, it means an overbought case, where prices are getting too low too fast and they're expected to increase. In case an RSI indicator trend does not correspond with the trend on the chart, many traders rely on indicator values. This case is called divergence. RSI indicator is one of the most popular indicators among traders. It is comfortable for use both individually and in combination with other indicators. You can simultaneously trace price changes on different assets by opening several windows. Also, you can look into the trend of a single asset by opening the same asset several times and entering various scale parameters or candlestick times for each window. Trading with multi-charts will also be useful for those who use a capital management strategy. With information on various funding arrangements, you will no longer need to change it manually each time. Professional traders often use multi-chart for monitoring correlations between interdependent assets. For example, the Norwegian krone is a commodity currency, and its price depends on oil prices and Brent oil in particular. By opening these two assets simultaneously, you were able to see the relationship between them. Many traders also add a parabolic SAR indicator, which helps them to determine trend change. If indicator knobs are below the chart, it is likely to be ascending, and otherwise to be descending. All this will give you more objective information for making an informed decision. We wish you successful trading on IQ Option. 3 Black Crows pattern. This trading pattern is used for defining a possible downward reversal on the uptrend. Main features of the pattern. After a series of several consecutive ascending candlesticks in a row, there goes a series of 3 descending candlesticks. Many traders see the closing point of the third descending candlestick as a signal of a possible reversal in the uptrend. Piercing line candlestick pattern. This graphical pattern is used by traders to identify a possible reversal of the downtrend. Main features of the pattern: after a series of several consecutive descending candlesticks in a row, an ascending candlestick closes above the middle of the body of the previous descending candlestick. After this candlestick, 2 more ascending candlesticks should follow. Many traders see the opening point of the third ascending candlestick as a signal of the possible reversal in the downtrend. Pin bar pattern. Pin bar is a candle with a small body and a long spike or wick directed upwards or downwards, depending on the direction of the market. For those who follow the candlestick analysis, this pattern is a strong signal of a future trend reversal. If the wick of a pin bar points up, the price is predicted to go down. If the wick of the pin bar points down, the price is predicted to go up. Traders consider an ideal reversed pin bar a candlestick with two comparable obligatory criteria. Traders consider an ideal reversed pin bar a candlestick with two comparable obligatory criteria. Pin bars open and close levels are placed next to one of the previous bar's ends, near either the top or the bottom. Pin bars open and close levels are placed within the previous bar, known as the left eye. In this case, most traders consider this pin bar to be a powerful signal for purchase of the option. We wish you successful trading with IQ Option. The trend lines help define a clear direction of price movement, as well as the corridor within which the price fluctuates at the moment. Trend lines are built with the help of graphical analysis tools. The support line is a level from which the price usually bounces up. The resistance line is a level from which the price usually bounces down. There are three types of trends: upward, downward, and neutral. Most traders combine the levels of maximums and minimums to receive the trend corridor, which allows you to analyze the price dynamics of the market. Line breaking pattern. Line breaking is a graphical pattern which seeks to catch a moment when the price breaks support or resistance levels. When the candlestick closes above the resistance line, many traders believe the price will continue increasing and trade for a rise. Breaking the resistance line is just as relevant for a neutral trend as for an upward or downward trend. When the candlestick closes below the support line, many traders believe the price will continue decreasing and trade for a fall. Breaking the support line is relevant for a neutral trend, just as for the upward and the downward trend. Line rebounding pattern. Line rebounding is a graphical pattern which seeks to catch a moment when the price cannot break support or resistance levels. When the price reaches the level of resistance and the first candlestick closes below this level, many traders believe that the price upward dynamic has stopped and trade for a fall. The rebound line strategy is relevant for a neutral trend, just as for the upward and the downward trend. When the price reaches the support line and the first candlestick closes above this level, some market participants believe that the price decrease dynamic has stopped and trade for a rise. The support line rebound is relevant for the neutral trend, just as for the upward and downward trend. We wish you successful trading with IQ Option. Rainbow pattern. This graphical pattern includes use of three exponential moving averages with different periods. First, with the period of 6 of blue color. Second, with the period of 14 of yellow color. And third, with the period of 26 of red color. Many participants believe that there exist the following powerful signals of asset price decline. Blue line with the period of 6 is above all other 6 of red color. Many participants believe that there exist the following powerful signals of asset price decline. Blue line with the period of 6 is above all others. Yellow line with the period of 14 is under the blue line. Red line with the period of 26 is below all others. The intersection of the blue line with the period of 6 and the yellow line with the period of 14 is, for most traders, the point of access onto the market and of purchasing the option. The probability of price increase is higher if blue line with the period of 6 is below all others, yellow line with the period of 14 is above the blue line, red line with the period of 26 is above all others. The intersection of the blue line with the period of 6 and the yellow line with the period of 14 is, for most traders, the point of access onto the market and of purchasing the option.